Ed Ponsi here, your FX educator here on behalf of FX Street once again. Good morning. The sun is out. The snow is on the ground. Hopefully everything's going to start melting soon. I hope you're having a good day. Ed Ponsi here. Just taking a look at the British pound this morning. As always, please feel free if you do have questions to get them in, and I'm more than happy to answer any questions that you might have. And if you have any currency pairs that you want to take a look at, or maybe you have a question about, I don't know, technical analysis, or maybe risk management or fundamental analysis, that covers it. That's all there is: technicals, fundamentals, and risk, right? Those are your big three ingredients to trading. And then there's all trading, events, things like that. So, any of the above, if you have any questions, let me know. And I'm more than happy to try to answer them for you. So go ahead and type them in. We'll be here for two 30-minute sessions. First one just started, so and there'll be a 30-minute break in between the two sessions. So I hope you enjoy it. Let's get started. Number one, British pound. You see up on your screen. First of all, huge day for the pound yesterday. Kind of amazing. And we talked about this earlier this week. What if the U.S. raises interest rates and the dollar goes down? And the dollar went down hard, didn't it? Dollar sign DXY for the dollar index. Right, another big red candle for the dollar. Even bigger than Friday's non-farm payroll, which was a really strong report. And both of these reports, the Friday's non-farm payroll, the Friday employment report, and then on Wednesday, the Fed raises interest rates. Both of those you would think would lead to a stronger dollar, and both of them led to a weaker dollar. And we actually talked this on Tuesday, how you could see the dollar weaken on a strong report, and how Friday was basically your hint that this might happen, that the dollar could weaken on Wednesday. Somebody out there, somebody big is selling dollars into rallies. And because you and I can't make that big red candle, it has to be a major bank or an institution. Nobody else really has that power. Okay, nobody else really has the ability to create that big red candle. It has to be somebody who's of significant size has the ability to do that. Okay, so let's think about this a little bit. So you might recall a while ago, we talked about the dollar potentially being a head and shoulders. And I think we talked about that back when it looked a little bit like this. And we said, this could be a right shoulder forming. And it kind of disappointed us. It went higher. But if you look at it now, hey, it could do it again, but it still could be a head and shoulders, right? It's kind of a elongated right shoulder, but it could still be a head and shoulders. Look, listen, it doesn't matter. Could be, would be, doesn't matter. What matters is what happens if and when the dollar gets to 99.50, because that would be the neckline of a head and shoulders, if indeed it is a head and shoulders. 99.50 would be the key figure here, 99.50. Okay, so that's the key. All right, so anyway, is this your green light to short dollars? It might be. And if you're going to short dollars, you probably want to buy something strong against the dollar. Something strong against the dollar would be the euro. The euro had some really good news yesterday. The Netherlands election did not go to the anti-euro candidate. Geert Wilders came in second place, I believe, did not win. That's very good news for the euro, and you can see a very big green candle there for euro. The pattern here, the flag pattern, did play out. We said, we did the measuring, and I think we said this could go to 108, and 108 is the resistance area. So far, we've gotten up to 107.50. Could go farther to 108. So for pullbacks, I think this would be a buy at this point. You've gotten through some tremendous event risk on the euro with the Fed and the election. Those were minefields. Those were some brutal potential events, and you've gotten through them successfully. Okay, so anyway, 108 would be the target now on the euro. Appears to be heading there. As far as the pound, the British pound, we just had an interest rate decision. They kept rates as they are, but the pound is really breaking out and rallying. I would attribute this to short covering. The Bank of England has a monetary policy committee, MPC. This is just like the FOMC in the United States. Within each central bank, most central banks, there's a committee that makes the decision on interest rates. So in the United States, it's not just Janet Yellen who makes the decision on interest rates. It's a committee, the FOMC, Federal Open Market Committee, that makes the ultimate decision on interest rates. In England, it's the Monetary Policy Committee, or MPC. Now you're seeing that the pound is rallying, and it had a big rally yesterday because the dollar was very weak, but it's having a big run today also. If I'll show you the 5-minute chart, some of this happened just within the last few minutes because we just got the decision from the Monetary Policy Committee within the last 15 minutes. Yeah, look at that. Right, within the last 15 minutes, we went from 122.60 to 123.30, and it's still rolling. Why do you think that is? I'm going to show you how important it is to this is why it's so important to understand what goes on within a central bank. You're saying, well, Ed's going blah, 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 blah about monetary policy committee, central bank, blah, blah, blah. And they did exactly what we thought they were going to do, right? Nobody thought that the Bank of England was going to cut rates. Nobody thought that the Bank of England was going to raise rates. But the Monetary Policy Committee has 9 people, right? Okay, are you ready for this? We thought all 9 people were going to say, keep rates as they are. Only 8 of them did that. One person said, raise rates. We have a hawk on the Monetary Policy Committee. And that's why the pound just jumped about 70, 80 pips. We have a hawk. This is how it begins. This is how a rate hike begins. It begins with one hawk, and then maybe next time there'll be 2 or 3. And there's only 9 members on the committee, right? So once they get to 5, they'll have the majority and they'll be able to vote in a rate hike. But it always starts with 1 or 2, and today they got their first one. So here's the decision. They're expecting 0.25, and that's exactly what they got, right? But they were expecting 9 members on the committee to vote for unchanged interest rates. Last time, 9 members voted for unchanged interest rates, but this time, only 8 wanted unchanged. 1 wanted a hike, and that would be Kristen Forbes. So this is kind of clever if you're Miss Forbes. Now everybody knows who her name is. I didn't know who she was 15 minutes ago. Now I know her name. You see, everybody now knows her name. It's pretty smart, even if you don't really want a rate hike. Anyway, I don't doubt that Miss Forbes actually really does want a rate hike. Don't get me wrong. I don't doubt it for a minute. But, anyway, now we have a hawk. So a hawk is a person who wants higher interest rates. A dove is a person who wants lower interest rates. We have one hawk, and we have 8 who are neither hawks nor doves on the Monetary Policy Committee. It's absurd to think that the UK should raise rates now. It really shouldn't. There's too much, with Brexit, in the face of raising interest rates as you're leaving the European Union seems a bit much. The UK economy is doing well. I say just go with it. Just go with it. Thank your lucky stars that the UK economy is going well. The question is, should we short this thing? And if so, where do we short it? Well, there was some resistance here right near 123, but the price blasted right through it. The next area of resistance is around 124.40, and that's too far away for us to even discuss it right now because it's 100 pips away. So at this point, I say let it roll. The dollar is weak today in the wake of the FOMC yesterday. But to me, this is short covering. I think a lot of people are caught short in the euro. Let's test that theory. Let's go and take a look at the Commitment of Traders, the COT report. Right, and you can see here, non-commercial. So you're now looking at the Chicago Mercantile Exchange Commitment of Traders. This is a futures report. Futures traders have to report their long and short positions. Non-commercial, these are large speculators. Right, commercials would be farmers. Non-commercials are speculators, people who are trying to make money on the British pound going up or down. They're speculating on the ups and downs of the British pound. Whereas commercials are like just companies that need British pounds to do business, not necessarily farmers. You have 143,000 contracts short. See the word short up here? And only 61,000 contracts long. So really, by more than 2-to-1 margin, this market is short. 143,000 contracts held by only 50 traders. Trying to give you an idea of how big these traders are. These are big traders. 143,000 contracts held by 50 traders. They clearly are taking large positions, shorting the pound in the belief that the pound will go down because Brexit is about to be triggered. And we have a whole lot of new positions here. 29,000 of those contracts are new. So recently entered, possibly losing money now, possibly being covered now. I think they thought they were getting an easy trade. Boy, are they mistaken, right? Look at the chart. Easy. Less than 48 hours ago, we were at 121.40. This has gone up 200 pips in less than 2 days. Nothing easy about it. The Queen of England is going to approve Article 50 today, is my understanding. It's called ascension. Apparently, the Prime Minister, Theresa May, out of respect for the royal crown, to go to the Queen herself for approval. Sounds crazy in 2017. But there you go. We've learned that, hey, that's what 2017 is all about. So apparently the Queen approves of Article 50, and that's called ascension. And it's being triggered I don't know if it's being triggered today, but anyway, this is part of the reason why this is going up too. So we can't short it against the dollar. What about against the euro? The euro is also strong. Euro pound coming on up here. Excuse me for 1 second. What about against the British pound? Sorry about that. My microphone's straight here. What about against the British pound, against the euro? This has been an amazing currency pair. The euro's been crushing the pound here. Maybe it's the pound's turn to fight back a bit. With this short covering, it could be time to short euro pound. We know that picture on this. The much bigger picture is that this could be a huge top forming, but we have no time to worry about that right now. In the shorter term, we could be doing a double top in here, A and B, right? And this looks to me like it could be a short right here. Let's go to a smaller frame here. I'm going to work my way down 240 minute. And again, you know, just so that you're aware, these are just technical setups. These are not recommendations. I see 3 higher lows, 3 highs. High, lower high, lower high, right? That's a sign of weakness. There are also, this is a low, whoops, low, and a lower low. So within that context, you'd have to say it's a downtrend. It's not exactly a screaming downtrend. But I'd rather be short than long. Also look in the context of where it's come from. Even if that were not lower highs and lower lows, you could call that a triple top. 1, 2, 3 triple top, right? And say like that, right? And a really nice run up into it. And one of the things you've heard me see over and over again is that everything on the chart is defined by its predecessor. Everything is defined by what precedes it. So a pattern means nothing unless it's preceded by a rally. A bottoming pattern means nothing unless it's preceded by a move lower. This is preceded by a significant rally, and that tells me that that there's a chance for a significant move lower here. So we have something to work with in terms of shorting euro pound. Okay. Now, as I zoom in on this area here, the key for me would be getting this candle lower than this area, which appears to be happening. I do see this wick here. I'm mindful of that. But other than this wick, we're breaking down here. So let's just say that if I were to just take a risk on this and say, I'm just going to sell it here, right? And put a stop up here above this high. This is how I game plan things. I'm not committing to anything. You just draw up a game plan. Let's just say I'm selling short at the approximate current price, 86.80. Green means go. Red means stop. It's an 80 pip stop. I'd better have 80 pips of target. Well, I have more than 80 pips of target. That's 100, 200, maybe 250. I certainly have 3 to 1. If this is my ultimate target area down here, then I have a 3 to 1, approximately 3 to 1 target. Okay. And so let's put some numbers on this. 8180. And the stop is 8760. That's not 8180. 8760 is the stop. Entry was not 8180, it's 8680. Sorry, things are happening quick here. Again, I don't make trade recommendations. I'm just drawing up strategies, how I'm just trying to demonstrate for you how I trade. What is the thought process? This target way down here is about I'm going to call it 8430. It's a long way down. Might take a long time to get there. Not worried about interest on this because let's face it, both of these currencies have basically zero interest in terms of interest rates. So it's not like I'm going to get clobbered one way or the other on interest. So risk reward wise, that's 200. 250. That's 3 to 1. This is 80 on the stop is 80. The target is 250. That's a little bit better than 3 to 1. I could actually make it 84.40 and it would be exactly 3 to 1. I'll use a 1 to 1 as a first target. So what would the 1 be? If my stop is 80, what would a 1 to 1 target be? 80 pips this way is my stop. 80 pips this way would be 86.00. Call that target 1. I now have a 1 to 1 and a 3 to 1. Hope this is all making sense. If there's any questions, just interrupt me. Feel free to stop me. I'll explain. Just don't wait till the end of the session to ask them. We're going to end in about 3 minutes. Okay? This is what seems to happen. I could just go with 2 targets, and that's fine. I could close half at 86.00, and if I hit 86.00, I'll move the stop down so that I have a break even, and then I'll shoot for the rest. So, you know, so this way, if I can just hit the first target, I know I have a winning trade. If I can just hit the first target and then bring the stop down to break even, I know I have a winner. And there's no question about it. And then I'm just playing with what I like to call, I'm playing with the house money. I bring that stop, I take half the money off the table at 86, bring the stop to break even, and then I hopefully we make it all the way down here and we have a huge win. But if I only make it down to the first target and then it comes back up and it hits the stop at break even, I still walk away with a small win. The worst case scenario, of course, is that I get stopped out. We never make it to the first target and we get stopped out. That's the worst case scenario. But if that happens, I'm not going to lose more than the first than 2% of the account. Right, 2% of the account should always be your worst case scenario. And it doesn't matter how many pips, how far away your stop is in terms of pips. You can always adjust the position size so that you make the position size smaller. So even if my stop was 1,000 pips away, I shouldn't lose more than 2% of the account. Does that make sense? It should. You should not lose more than 2% of the account under any circumstances ever, no matter what. And that's because you can always make the position size smaller or larger, you know, depending on how far away the stop is. So, you know, if somebody asks you, well, who's taking more risk, the person with a stop 10 pips away or the person with a stop 50 pips away? The answer is you don't know, because unless you know the position size, you can't answer that question. There is no answer to that question. Okay, so I'm just going to leave it. We could do a third target. Sometimes I will. If there's like if there's a really engaging third target, we can use a third target. In this case, I'm looking here. I don't really see one jumping off the screen at me. Maybe there's definitely some support here around 85.50. There's definitely some support here at 85.40. There's definitely some support at 85.20. There's some here at 80. Right here under 85, there is some. Maybe I'll tell you what. This says 84.99, and you see that line right there. Let's put a third target just above 85. We'll call it 85.10. And that'll be our third target. And this way, we'll just move 1/3, 1/3, and 1/3 at each target. That's really my preferred way of doing things. Close 1/3 at 86 and move the stop to break even. If the price continues to drop, close another third at 85.10 and move the stop down just above 86. Okay, and that's our game plan for Euro Pound. Let's see how it plays out. We will continue to follow along as this goes. Okay, all right. We'll move on from this. And this is going to wrap up our first session of the day, but we'll be back in 30 minutes. So come on back and join us in 30 minutes for our next session. This is Ed Ponsi for FX Street.